There we go. All righty. Well, I'll tell you what we're going to do. We're going to jump into our presentation.
Okay.
And let me click on PowerPoint here. I will share my screen.
I already downloaded the guide.
Oh, you did?
Yes, I did. You sent it to me, and I got it.
Great.
So now I have pretty much everything.
Good.
Everything. Yeah.
So you see our screen on building business credit?
Building business credit in your companies. Yeah.
Great.
EIN.
Absolutely. Well, let's go through it then.
Okay.
The first piece of when you talk about building business credit, and actually, let me give you this. This is all of my contact information.
Okay.
So you can see it. And actually, I need to do one little thing because I have to let someone into the chat. I need to move this over here. Okay, great. And so I'm going to show the contact information later in case you need to see it again.
Yeah, I think I have your email. Okay, one of your emails as well. Where you share,
like what's business credit, and so we're all on the same page. Business credit is when you have credit that's in the name of the business that's linked to your EIN and not your social security number.
Okay.
You know, so if one is going ahead and putting in their social security number, then that's going to be an issue, right? Because that means that you may have qualified with the social security number, but if everything's tied to you, what was the point of having an LLC and a corporation and all that stuff to begin with, right?
Exactly. Yeah.
So let's talk about applying. When you apply for something like a business loan and they pull your business credit, they're going to use your name, your address, and your EIN, right?
Okay.
And then that information is sent to the business credit reporting agencies, and they supply whoever the lender is a report. And so sort of similar to personal credit when they go and pull your file from one of the credit reporting agencies, right? And they're going to be looking up all your information. Now, if you don't have a business file or business credit file, it will be created at that time that you apply for business credit.
Okay.
Again, very similar to personal in that regard.
And it's not going to be linked, not at all, to
Correct.
my personal credit.
If it's true business credit. If it's true business credit. And we're going to talk about like how do you make sure that's happening, right? And so with this kind of credit inquiry, they'll make a decision based on what's on the business credit report. Now, obviously, most of the time, if they don't find anything on that business credit report, then business credit is typically not issued.
Okay.
Okay. So hold on one second here. I'm going to ask you to do me a favor, and I think the echo is coming from your mic. So I'm going to
let me. That's probably the The heat. Let me just turn it up.
Yeah. I'm gonna mute you, and so just ask me a question in the chat. Okay.
Okay.
All righty. So let's talk about what's the benefits to having business credit. And hi Janice. I saw Janice came in, so we'll say hello back. Business credit is credit that has no affiliation at all to your personal, and so it has no impact on the business owner's personal credit at all because it doesn't show up. It's like it's like invisible. Okay. It also means that anyone who has bad credit or even personal credit can still be approved for business credit since it doesn't have any impact generally. Now, business credit, like I mentioned, has no impact on your personal. And as you guys know, 10% of your score is based on your personal credit score is affected by inquiries. And with business credit, there is no such thing as inquiries. It doesn't really matter. Okay. So one of the challenges is when you're a business owner and you're trying to get credit, you go apply and the inquiry hits your personal credit, makes your credit score go down. And then you subsequently, the next time you try to apply for business credit, your score is lower. And so you either may not qualify, or you qualify for a lower amount. Plus those inquiries remain on your credit for 2 years. Now, they only affect your score for 6 months. And after 6 months, the effect of that inquiry goes away, but the record of it stays, for another year and a half past that point. Some unsecured business lending sources won't lend you money if you have 2 inquiries or more in the last 6 months. So you definitely want to watch your inquiries when you're applying for business credit. 30% of your total score, your FICO score, is based on utilization. So when you use your personal credit for cards, like example, you go to Home Depot, you get a Home Depot contractor card, and then you charge it up for a job, your utilization is over 30%, and it drops your personal score. And that's and that 30% is the magic number. So you want to stay below 30. Now, if you get below 10, you'll actually see points added to your score. You get above 30 and it hurts you. So we just use this example of, if your limit's 1,000, any balance above 300 lowers it. And a big chunk of your score is affected by applying for and using. Because the 10% is affected when you got the inquiry, and the other 30% is when you use the card. So that's what true business credit doesn't affect your score at all. So let's talk about how business credit is scored. It's only scored based on your ability to pay your bills on time. As a consequence of that, a business owner can get credit much faster and build it faster with a business credit profile than they can versus personal. Because all those other negatives with getting new accounts and inquiries and all those things, they don't count on business credit. So you never have to worry about the cycle people get in with their personal credit where they're taking 5 steps forward and 3 steps back. There are 5 factors, as you guys know, with personal. There's payment history, utilization, length of credit history, accumulation of new credit. That's where inquiries come in, and credit mix. And credit mix is where they look at your credit report and they say, okay, do you have installment loans? Do you have mortgages? Do you have credit cards? So the bigger mix of credit, that is where that particular category comes in. Now, with business credit, there's only one score. That's the paydex score, and it's purely based on payment history. And it's rated 0 to 100. So the top category is you make the payments early, you get 100. Now, the way Paydex works, Dun & Bradstreet's Paydex score works, is what they're saying is they give you 100. That means that when a lender looks at that, they were like, oh, we can anticipate that this person is going to pay early. If they pay just on time, you're at an 80. If you pay 14 days late, you're at a 70. 21, 60, 30 days, 50. So you notice a big difference with personal credit. If you're 30 days behind, that's when the first negative comes in. Whereas with business credit, if you're 30 days behind, you already dropped your score in half. So being days late on business credit has a significant impact on your credit. And that's where you absolutely positively cannot be late with business credit. You have to monitor that. So I always recommend to my clients when they set up a new business credit account that they take a spreadsheet out, put in the day that they make an order, and when is that order going to arrive, when is the payment due, and make sure that they're early. And you don't want to be too early. And this is why I say when you place the order, when the order arrives. If you pay your business invoice or if you pay your business credit bill before the service is delivered, or if it's a product and it's before the product physically arrives, sometimes they won't count that as credit. They'll count that as a cash purchase, not a credit purchase. And so if I order it today and pay it tomorrow, I won't get the benefit on my business credit score of that payment. So you just want to make sure that you've got some days after you order if you're going to pay early, because you don't want to pay too early or it won't count. And if, by the way, if you guys have questions about any of this stuff, just drop it in the chat. I'd be more than happy to answer any questions you have. So we know consumer credit scores can take years of well-disciplined borrowing before you get a score. Generally, if you were clean, like let's say you were 18 years old and you had no credit, it takes 6 months to establish a FICO score. And so with business credit, though, all you need is 2 to 3 reported accounts for you to get a score. And so you figure if I went today, today's Wednesday, and I applied for 2-3 business credit accounts, by January, I'd have a score, a Paydex score, if all of them reporting. And most are going to report within 30 to 60 days. Some do take as long as 90 because some credit vendors only report quarterly. They don't actually report monthly. So that's a question, by the way, you'll want to ask that vendor or lender when you set up that business credit account. How often do you guys report? And when do you report? Is it the beginning of the month, the end of the month? Usually it's one set time for every company. So they'll always report on the 15th, or they always report on the 1st at the end of the month. So you just need to know where does it fall in that cycle and keep a record of it. So what this means is that you can build a business credit profile in a very short amount of time, especially compared to personal credit. Now, the one thing about business credit, anyone can see your credit report. With consumer credit, you have to have permission. And in the term legally in the law says I have to have permissible purpose to pull your credit. And I need some type of consent, whether you gave it to me verbally or if you gave it to me written. If I pull someone's credit, an example, Castle, we can pull credit on our clients, obviously. But if we pull someone's credit without their consent, that's against federal law, and you can get in big time trouble for that. They'll cancel your ability to pull credit. So most institutions try to keep good records relative to that consent. Now with business credit, it works a little different. With business credit, anyone can pull your business information, and they don't need your permission at all. All those consumer protections that you get, the Fair Credit Reporting Act, Truth in Lending Act, those things don't apply when you're talking about business credit. So when you talk about business credit, customers can see your report, clients, suppliers. someone you might want to do business with, like a future partner, a competitor. Any of those folks can pull your business credit report. Now, before I move on from there, that's also why you think about it, why inquiries don't count against you. Because you can't, if anyone can pull my credit report, then you can't count inquiries, because inquiries I have no control over. So let's talk about when you apply. Generally, when you fill out an application, you're going to put your social security number down. And just by virtue of doing that, it's going to involve a personal guarantee. Now I will throw this out there. When you apply for business credit, if you do it online, a lot of times those lenders will default with a full recourse account. So you may be applying for example, a contractor card with Home Depot, but if you do it online, generally it's going to be the one that has a full personal guarantee involved. And if you try to leave off your social security number, you'll get that little red flag around the box saying, oh, you can't proceed until you fill this out. That's why with some vendors or lenders for credit, you may have to actually go in to an office or location and fill out a physical form, or talk to someone online, have them email you or fax you the form and send it back that way. Most of the time, their online applications default to the regular consumer-based accounts that have full personal guarantee, even though from a marketing perspective, the name on that account will say, business card or commercial account. But you'll know that with whether or not they demand that you have an SSN on that application. There's a few exceptions to the rule, but we'll talk about that later. So generally, you see with your homes, your cars, your bank accounts, all of those things are available if you default on an account in which you're 100% personally liable. So you're putting everything that you have at risk. Now, there's no question, of course, starting and running a business is risky. As some of you guys may know, I think the SBA statistics are 85% of new businesses are going to be out of business within a year. And that's also why it's very difficult to get business credit with most conventional banks, because they look at a new business as high risk. So it's tough to get one that doesn't have a personal guarantee, and they don't make it easy, even though sometimes they have it available. As an example, Chase has a Chase Inc. card that you can get without a personal guarantee for your business. However, you can't get that specific Chase Inc. card online. The only way to get access to that card to apply for it is you actually have to call Chase over the phone and specifically ask for that account. Because if you call them and say, hey, I want to apply for your Chase Inc. card, they'll say, oh, just go online. Well, no, I don't want that one. I want the one without a personal guarantee. I want the corporate card. Okay. That's a whole different card. And you have to basically know to ask for it, or you won't get it. Now, one of the advantages of business credit is that the value of the business, when you go to sell it, can be increased. Because if you had to choose between two companies to buy, and one had business credit in the name of the business ready to go, and the other one didn't, it was all tied to the owner, which one's worth more? Pretty obvious, the one that's with limited credit or no credit profile is going to be worth less, because you're going to buy that business and then have to put everything in your own name. Whereas if that was a business credit or company with business credit, they would already have a paydex score. You wouldn't have to establish one, as an example. Now, when a business owner applies for financing or credit, their business credit is reviewed. And if you don't have business credit, then you have to work really hard to get it established. Because more than likely you're going to get declined if they go to pull that credit file and there's nothing there, right? And we talked about this earlier. There is no Fair Credit Reporting Act in the business world that lets them that they have to notify you that they pulled your credit. They don't have to. They can pull it, and sometimes they'll pull it multiple times and you'll never know. And Dun and Bradstreet won't tell you that somebody pulled your credit either. So, excuse me. Another benefit of business credit is that it doubles your borrowing. Well, you may already have consumer credit. So let's say you have a consumer credit account at Best Buy, and they may give you a $5,000 limit. Okay. Well, you can also have a business corporate Best Buy account. They may have a $10,000, $20,000, $30,000 limit. And so having that personal as well as corporate borrowing capacity really expands the amount of access to capital or funding that you can get. Same way if I've got, again, like a Chase Freedom card, they may have a $15,000 limit, but then I've also got that Chase Inc. card, that's the corporate card, that's the business credit card, that may have a $40,000, $50,000 limit. So just having business credit more than doubles your ability to borrow to feed your company. Now, per SBA, business credit limits are 10 to 100 times that of consumer limits. And I just gave you guys an example. The average Staples card, might be 3,000, but in the business world, easily it'll be 30,000 or more. And with that ability to get more credit, it allows you to be able to scale your business faster than if you just have personal credit. Doing it with personal credit just makes the road so much more difficult. So we talked about how business credit can be obtained fast, right? And let's talk about that process. You get approved for initial credit, vendor credit, typically, to grow your business within a week or two. Okay, and then you wait for them to report in 30 to 90 days. Now you have 2 or 3 of those trade lines, as we call them, that report, and now you got your paydex score established. So you can have, like we talked about this before, an established business credit profile in 90 days or less. And then you can start getting revolving store credit cards, and that's generally the progression. So with business credit, you have different levels, what I call them tiers. So you have tier 1, tier 2, tier 3, tier 4 levels of credit that's available. But to get to tier 3, you got to have credit at tier 1 and tier 2 level, as an example. Within 120 to 180 days, now you're talking about cash credit through Visa, MasterCard, Discover, and American Express that you can use anywhere for any purpose. Those cash credit card accounts that are business accounts, you can't start there. You have to build up there. And I'm just checking the chat to see if we have any questions. Is that my friend Janice Corey? Or I know you're married now, Janice, for quite a while. I know I'm saying your maiden name. Welcome to our meetup. Business credit is perfect for startups. Most conventional and private lenders won't lend to companies that don't have financials or haven't been open for 2 years. But there is business credit for startups where you can literally start your company last week and apply for credit this week. The most popular cash flow type of financing requires 1 year in business and steady revenue. Most consumer credit card approvals are based on personal income, but with business credit, startups can get loads of new credit without any documentation relative to their business income. So business credit is perfect for those businesses where you don't really have those financials yet. And usually, as you guys know, when you're starting a business, at the very beginning, it's all about the expenses. You spend money to set up your phone bill. You spend money to set up your location. You spend money to put in furniture, paper, office supplies. You just start shelving out money at the beginning, and you don't really have a big profit to come in. But that's where having the right type of business credit that won't look at financials and won't look at bank statements comes into play. So even if you don't have cash flow at the beginning, you can still get approved. And again, tax returns are something else that's typically not looked at for business credit for startups. Now, if you go into a bank and you try to get business credit, they want to lend to established business. Banks are not the place to go to get business credit if you're a startup. Most businesses that do lending want to see collateral. That's one of the big C's of credit is collateral. But of course, the fact that since businesses fail at such a high rate, that becomes an issue. Janice Byers, good to see you, Janice. This is why most lenders make it so hard to get money. You know, there's an old saying, banks don't give money to people who need it. It's so true. Because you're like, well, if I had all this collateral, I would need a loan from you guys. But that's generally how it works. But that's part of where, and I'll do a little plug for Castle, that's where it's important to have the right kind of partner that can say, hey, don't waste your time applying with this guy, go to this company. Because our secret sauce is we know what the underwriting criteria is for many different lenders and their financial products. So when we send someone someplace to get a loan, we know in advance if they're going to get approved or not, because we know what the underlying criteria is, which is key. SBA requires that all business assets and even personal assets are used for collateral because of risk. And so now, let me take a break here for a second. SBA does not lend money. SBA guarantees loans that private commercial lenders are doing. So, and for that guarantee, which basically means if the loan defaults, the lender is guaranteed to get 75% of their money back, because if you don't pay, or if they go to liquidate the assets, they only get 50 cents on a dollar, SBA will make up the difference, up to 75% of that loan. But to have that guarantee, SBA wants a personal guarantee on everything, on all the assets of the business and all the personal assets as well. So just FYI, have that in the back of your mind when you have to go get SBA financing. Business credit is one of the only ways to get money without having to provide collateral to offset the risk. It's because you're basically looking at the business and the backing of the business backing the loan. So let's talk about what our competitive advantage is. 90% of the population knows nothing about business credit. Most people have heard of it, but they don't know how to get it. They don't know where to get it. And if you do, if you're able to set up business credit for your business, you put yourself at a huge advantage, because given all the things we already talked about, your business is going to have flat out more access to capital than most of your competitors. And we know that the number one reason that businesses fail is because they don't have proper access to capital. They were either underfunded, or the cash flow that they projected they were going to make did not come in as strong as they thought they were, and they don't have time to wade through it. And obviously right now with COVID, we see this, that a lot of businesses that were on a knife's edge financially aren't making it, because that little brief few months of being out of business was enough to tip them over into bankruptcy and liquidation, unfortunately. Well, one of the things and this is one reason I'm so much a fan of business credit, is that you don't have to put your personal financial situation at risk if your business is relying on business credit to fund it and not your personal capital. Business credit is how real big companies do it. Every highly successful business in the country has business credit. And most of these companies use their business credit to get as big as they are, where they multiply out. And we're going to talk about that. This is the role of a CFO. The job of a CFO in a company is to offer business credit and is to make sure the company has access to business credit in its name, besides doing, reporting out the earnings per share and all that stuff to the investors, is to make sure that the credit of the company is very well done. So we're going to talk about example of Facebook. Facebook has 40 trade lines. And again, obviously Facebook is a internet company. But remember we talked about how with business credit, you can pull credit on anyone. Anyone can pull up the credit profile of Facebook. You just have to be willing to pay the fee to get access to the report. Microsoft has 131 trade lines. Apple, the biggest cash-rich company in the world, has 138 trade lines. And then Walmart, 513 trade lines. Now, how does that work? Well, when you typically buy goods, let's say, for example, groceries, or clothing, in Walmart, those items aren't paid for. They use business credit to get those products. And so they get cash first when you check out, and then they pay the vendor for the cost of that product, and then, pay the rest of the expenses and then tell the government they didn't make any money. So that's how business is done. I'm not using my money. I'm using someone else's money to buy those products. And then I'm using leverage so that when I'm making profit, I'm actually making profit on the use of someone else's money. And then they get paid last after I get the cash first. So let's talk about, contrary to what many people believe, business credit is not just for big companies. Small companies can build business credit. Anyone can. What comes to mind, though, is you got to think about, can I get my hands on the same type of credit that larger companies do? And it all comes down to if you know how to do it. It's not something that's restricted just to large companies. It's just a matter of knowing who to go to and what's the process. So let's talk about what the process is. How do you do it? Number one, the business starts out with, I got to look at my profile. I got to look at what's in my profile. How am I going to build my company? If the business starts out, and all businesses start out with no profile, right? But when you first apply, like we mentioned before, you establish it by putting that information on an application. And when that application goes to the database, if there's nothing there, they take what's in that application and they start that file in the database. And the rest of this we talked about before. And, I just want to start out with, you want to be sure that when you apply for business credit, know what the criteria is that they're looking for before you apply. You don't want to apply and then get denied, and then apply and then get denied, and then apply and get denied. That's not building up a successful business credit profile. You want approval, 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 with ever increasing amounts of credit being granted. And as your business continues to use that credit and you pay your bills timely, you will then qualify for more credit as that profile builds up, as that paydex score builds up. First step is you got to build credibility. Credibility is everything. Is that old saying, perception is reality? That's absolutely the case. So before applying for business credit, make sure your business meets all the credibility standards that lenders are looking for. And there's over 20 points, and we're going to just talk about a few of them. Number one is your name, right? You got to make sure that when you apply for credit, you're using your exact business legal name. So when I'm applying for business credit, I'm using Castle Commercial Capital LLC, not Castle Commercial. Sometimes people use acronyms. That's like KFC. But if it's actually Kentucky Fried Chicken LLC and that's their name, that's what needs to be on those business applications. Make sure that you're using the full name and including any DBA filing when you're applying for credit. And you want to make sure, this is key, that your name matches everywhere. So your articles of organization, if you have an LLC, what's on your license paperwork, if your business has to be licensed with the state, what's on your business bank statements, it should be the exact same spelling everywhere. And if you're an Inc. or you're an LLC, or if you're using corporation after your name, whatever you're using, make sure it's that same designation everywhere. Lenders look at that consistency and sometimes inconsistency when they're making a lending decision. Now, with business credit, you can't do it as a sole proprietor or a partnership because by legal definition, you are liable for all debts and liabilities of a company when you're a sole proprietor or a partnership. So if you want business credit, you got to be a LLC or a corporation. There's no ifs, ands, or buts about it. And some companies and some lenders look at it and say, hey, this person isn't even a real company if they're not a corporation or LLC. Because who goes into business and makes themselves completely liable for all liabilities and debt of the business? Something that you want to definitely keep in mind. Now, your EIN is the next thing. Get your EIN from the IRS solely. If you go to type in Google getting an EIN, other companies show up. But as you guys know, you just go to irs.gov. They'll get your EIN number like in 5 minutes and it costs you nothing. Your EIN is going to be key. At the time when you go to apply, you want to make sure that you've got the right EIN number. I've seen it in the past where people come to me and over the time they've had 2 or 3 businesses and they get their EIN number screwed up when they go to apply. That'll kill you credit wise. So, if you're using a current, a new or current EIN number, anything that has that old number, put it aside, never look at it again so that you never get it confused. And by the way the IRS looks at EIN numbers, you should not have a new EIN number for every single company that you set up. And I'll let an accountant explain to you why. But the IRS traces the cash flow and the revenue from a company to a person. So if I have 3 companies, example, ABC Financial, EFG Financial, and Castle Commercial Capital, and they're all the income from all those LLCs are all flowing to me, I only need one EIN number per the IRS. Now, do some people get a separate EIN number? Yeah, they just don't know. But if you actually call on the phone, the IRS, they will tell you that. Business address must be a real brick and mortar building. It must have a deliverable. In other words, there's an address you can receive mail to, a physical address. Cannot be home, cannot be a post office box, and cannot be under any circumstances a UPS address. And really, let me go back to the home address. There's millions of businesses that are home-based businesses. Can a home-based business get business credit? Absolutely it can. However, it will be limited in how much business credit it can get. So I could probably say that's probably a should not have a home versus a cannot. But you cannot do a post office box. If you're trying to get business credit and you got a post office box or a UPS address, you will get denied. That's like an automatic denial. They'll see straight through that. They'll also take your address and let's say you're using a room in your basement on 37 Main Street, Suite 100. And Suite 100 is your basement, right? When the lender sees that address is zoned residential, right? Your application is going into the round file. Okay. So definitely don't want to do that. So let's talk about some options. One of the best options is a virtual office. There's a lot of options out there. There's Americenters, there's Regis, there's Opus virtual office. There's a lot of different ones out there. You can go on Google and do virtual. Virtual offices are a great way to have a professional address for very little money. Um, and you can receive your mail there. You can rent out rooms if you have to do a conference. But it's a way to have a legitimate commercial address on your application without the expense of a true office. Because a true commercial private office, you could be spending, $3, 5, 10,000 a month. And obviously that's not going to work if you're a startup. But a virtual office, you can get a virtual office address. Some places charge $50 or less. So it really just depends. I would definitely recommend looking into that. 411. What's 411? 411 is the old business directory that no one uses anymore because we got this thing called Google, right? You remember in the old days, you would call information and speak to an operator and ask her, hey, I like to add the number and address to ABC business. Directory assistance is still around. And actually, a lot of lenders use directory assistance to find out if you're a real business. And so if someone gets on the phone and they call directory assistance, they dial 411 and they say, hey, I like the number to Castle Commercial Capital in Southfield. If they say, oh, I'm sorry, we don't have a listing for Castle Commercial Capital in Southfield, the bank says, okay, thank you very much. And they hang up, and then that file is denied. They don't have to spend any more money or do any further research on a company. They just stop right there. I don't have to pay Dun & Bradstreet to order your business report if you're not even in directory assistance. So now how do you check on that? You want to make sure that when you go and set up your company, that you are listed in multiple business directories. That's one of the best ways to get set up. Obviously, with a phone number, an 800 number is awesome. An 800 number adds to that perception of credibility. And even if you are a single owner at a home-based business, you can get a toll-free number really, really cheap, less than $15 a month. And it makes you look bigger. Now, it might be you at your kitchen table, but having an 800 number makes a difference, especially if you're going to use it with fax. Now, I use a company called Freedom Voice, and Freedom Voice allows me to use my number, my 800 number, as also my fax, which, you think no one uses faxes anymore, but guess what? Lenders like to see them. Now, if you got a cell phone and using your cell phone as your business line, that's a big no-no. Now, you can do it, and obviously I'm not saying you can't because people do it every day, but those are people who don't have business credit, right? On your application, put your mobile number, and if that's your business number, then list that as well. But under any circumstances, don't put your mobile number, your cell phone, as your main business number, and where it says business number, where it says cell phone, leave it blank. Because if you leave it blank, that's going to imply to the lender that they tried to hide that they're using their cell phone as their business number. And we have databases where we could pull a phone number and it will tell us if that's an actual cell number versus a landline. So if you're using it, that's fine, but do both. Now, honestly, I recommend don't do that at all. You should never put your personal phone number as your business number. There's too much spam. You don't ever want to do that. Cheapest thing to do is get a Google Voice number. You get a number with Google Voice, it's free with every Google account, and that number actually qualifies as a commercial and business number. And essentially it's a virtual number. And that Freedom Voice number I mentioned, that Freedom Voice option I mentioned earlier, is like a virtual number, but technically it counts as a commercial line, and that virtual number will then forward to your cell phone. It makes you look more professional and it meets the standard. I mentioned about fax numbers. No one uses faxes anyway, but lenders like to see them. And it's one of those things, perception is reality. I suggest that you set up an eFax or something like I mentioned with Freedom Voice, where you can use that virtual number to not only receive phone calls, but also receive faxes and send faxes. Let's talk about a website. Websites today are more important than business cards. You know, it used to be 30 years ago, you weren't in business until you had a business card. That was like one of the first things you did is you order business cards with your name and number and your address and all that good stuff on it. Nowadays, that's obsolete. That's so 20th century. Today, it's about a website. And if you're not in business, if you don't have a website, a lot of lenders look at you and say, well, you're not in business if you don't have a basic website. And there's between Wix and Weebly and other Shopify, other providers, it's so easy to get a website now for so little money. It's we don't have any excuse. One tip I would give you about a website though, don't, if you have more than one business, keep the main thing the main thing. Don't put side hustles on your website. So if I'm running, if I'm an insurance agent by day and I'm a landscaper at night, have separate websites for each of those companies. If they pull up your website and they see other businesses affiliated with you on the same website, you could do it to save money, but your application will be denied. Email. Oh my God, this is one of my pet peeves. You got to have professional email. So my email is malcolm@castlecommercialcapital.com. Setting up a business email is key. When you go to set up your website, I'll give you guys a free tip here. There's a company called Gandhi.net, Gandi.net. Gandhi.net will give you a website URL for like, $11, $12 a year. And it comes with 5 free email addresses tied to that URL. At worst cases, you could do Google My Business and they'll set you up with emails in the name of your company for $5 a month. But whatever you do, please don't have partychick2009 at Yahoo as your email address when you're applying for business credit. Now, is that a deal breaker? No, but all these things pile up. And so if you're working out of your house and you've got your cell phone as your business number and you're using your Hotmail account or Yahoo account or Gmail account as your main address, it adds to that perception of this isn't a real business. And so you want to really make sure that you get it in your company name. That's key. And it's not that much money. Now, bank account. Your business bank account is key because a lot of lenders will look at the date you open that bank account as the date that your business started, which might seem crazy because you would say, well, man, I could change bank accounts multiple times. Yes, you could. But from the lender's perspective, they want to look at when's the date that bank account was opened. And they want to know how long it's been around, because you can get a LLC from the state of Michigan for $50, $75, whatever the fee is, and just sit on it for years and never use it. But if you set up a bank account so that you can take in money and expense for the business, now you're in business. Also, shelf corporations don't work anymore. It used to be in the old days, but not anymore. So you can't buy a company that's been seasoned for 10 years and then say, oh yeah, I got a 10-year-old business. They're like, no, your bank account is 18 months old. That's the day we're going with. So just FYI. Licensing. If your business is in an industry that requires licensing, you need to make sure that you're licensed. That seems like standard fare, but you'd be surprised how many people come to us for a loan and they actually aren't licensed. They've been doing business, but nobody's checking. Nobody's going around as a contractor and checking if they have a license. But if you're applying for business credit, one of the first things they're going to do is go to, example, in Michigan here, they're going to go to the state of Michigan website and check the licensing to see if you're there. And they're going to check if the address and name and phone number and everything affiliated with that license is consistent with the other information you gave them on that application. most licenses require that if you change address or you change your contact information, you have to let the state know within 30 days. That's how it is in Michigan with most licenses. In other states is the same. So I'm going to skip here with licenses. Just make sure you got all your filings in. If you got an LLC, you know you're supposed to file for $25 an annual statement. I just got a notice about a week ago from the state of Michigan saying you can now file the 2021 annual statements. So starting, I believe, like a week ago, you can start doing that now. You can go early. Make sure all your IRS filings are listed correctly. It seems like everyone would know to do that, but sometimes it doesn't happen. Make sure with any agency that they have your business name listed correctly. Sometimes there's human beings that set these accounts up, and if you pull an application in for a license or some type of business directory and it's misspelled, right away get it fixed, because these databases cross-pollinate, and if something is incorrect one place and you let it go too long, it'll get transferred over to other databases, and you'll always have that error will keep coming up. And so you really want to make sure that they got it correctly the first time. Now, with business credit reports, there are 3 kinds of business credit reports. There's Experian Business, Dun & Bradstreet, and Equifax. They're not the same databases as the consumer Experian and the consumer Equifax. They're actually separate divisions of those larger companies. The biggest one by far is Dun & Bradstreet, by far. Experian is number 2. And you see the cost of Experian is like $49 to $99 for a report. You'll definitely want to get a copy of your report because you want to know what's on it. Because like I said, anyone can pull it. And there could be errors, just like with your personal credit report. Experian can mess up with your business. And so if there's an error, you want to get that fixed right away. Equifax also allows you to purchase your report. And even though it's your report, unlike consumers where you can get one credit report free every year, in business, you have to pay every single time to access your own report. They don't let it out for free under any circumstances. Now, the thing about Equifax, not a lot of providers report to Equifax. So if you find a business credit provider that actually does report to Equifax, they're actually pretty valuable, because most of the vendors you deal with or lenders will not report to Equifax. By far, I mentioned earlier, Dun & Bradstreet is the big guy on the block. The main principal reason is, 1, they're older than all the other companies. They've been around longer. And 2, if you do government contract work, whether it be with the state, the local municipality, or the federal government, you have to have a DUNS number. And that DUNS number is free, by the way. So when you go to Dun & Bradstreet, anyone can put their information in and apply for a DUNS number, which is mandatory if you want to build business credit. Now, you got to be careful, because Dun & Bradstreet will call you, and they'll try to sell you other services for a few hundred or a few $1,000s. The Dun & Bradstreet number is free. So don't fall for the sales pitch. Just say, I want my DUNS number, and that's it. Because you don't need it. And because the government makes everyone have a DUNS number, DUNS can't charge for that service. So for the number. Now, the other extra stuff, yeah, they do. Dun & Bradstreet has a self-monitoring service. They even got a credit builder service. But all of those extra services aren't actually very effective. So I would not buy that, those extra fees. Just get your DUNS number for free and call it a day. Building business credit, that report and knowing what's on it is going to be key to your success long term. There's monitoring service through NAV, NAV. You look up a NAV account. It's a really small fee. you can have a monitoring of your business credit. I want to say $20 a month, substantially less than what Dunn's will charge you for the same thing, except Nav will also tell you what's on your Experian and Equifax reports as well. When you're building business credit, you can't generally start out with business credit cards. You're generally going to start out with what we call vendor credit. That's why all during this talk, I've been talking about I'm talking about lender and vendor. Vendor credit is when I go to an account and they give me a net 30, meaning they're going to give me a line of credit and I'm going to order some goods and services, and I have 30 days from the time that I order to pay it back. That's what I call tier 1 credit. It's the easiest credit to get because most of the time with net 30 accounts and other type of vendor accounts, they're not going to require years in the business. They're not going to require big bank balances. They're not going to require cash flow and bank statements and P&Ls to prove you're a profitable company. And a lot of times they'll start you out small. So they may initially set you up with only a $300 limit. So, and let's talk about some options with that. With some vendors, all they need is your EIN number. They'll check a 411 listing, and then they'll give you the credit. It's not a big, long, drawn out process. Also, you want to make sure when you apply, you don't use your Social Security number because some vendors will also have consumer-based accounts where they'll have, for example, Best Buy will have a consumer account and a commercial account. So you want to be clear about which one you're applying for, especially if you're doing it over the phone. And those net 30 accounts are going to report as a trade line on the Dun & Bradstreet system. And this is also, of course, true for Equifax and Experian. And it won't really matter whether it's a vendor account with a company like Staples or Best Buy or a credit account with Chase Bank or Bank of America. It's business credit. And as long as your payments are on time, that paydex score will rise. So you want to have at least 5 net 30 vendor accounts to establish your tier 1 credit. Some vendors will have you work on a prepaid basis. So they may, again, if you're new and you don't have any history, they may say, okay, order from us for 2-3 months on a prepaid basis, and then we'll approve you for terms. Because they want to see that you're going to be a consistent customer before they give you credit. Now, it may be a vendor that you don't really need their product. You're like, well, man, what do I need, 10 reams of paper for? Well, it's not the product. You care about the credit, and you're trying to get the credit established with those first initial accounts so that accounts that need to see 10 business credit accounts before they will approve you, this will be one of your 10. This will be one of your foundational accounts. And you just need them to get to the bigger boys, and you just have to sort of go with that. Like I mentioned before, you definitely want to make sure you pay your net 30 vendors on time because that's the only thing they're using to judge you with. Hey, Lee, good to see you. I see Lee's got a question about the personal credit score range. The highest being a 50. What is the lowest and highest? Oh, for business. We talked about that earlier, Lee. With business credit, it's 0 to 100. So 0 to 100 is going to be your range. And by the way, while we're on that, what's a good score? 77. If your business credit paydex score is 77 or higher, you're going to get most forms of business credit. Some they want to see 85, but most, if you're at 77, that's good enough. Generally, you're going to take 3 cycles for these accounts to build your score. So you got to be patient at the beginning because remember, you're getting set up. So you have to apply for the account, get set up for the account, and then let them establish the reporting within whatever their system is. And then once that system is established and you're in the system, then the reporting will be consistent. But you just got to be patient at the beginning. So let's talk about how you get approved for vendor credit. Here's some real good sources for free. You have Uline, Lachlan Associates, Quill, Reliable Office Supplies. And like I mentioned, you'll need a total of 5 payment experiences. Now, what's a payment experience? A payment experience is not an account. If I'm getting an account, a business credit account, and they report to Dun & Bradstreet and Experian, that one payment will count as 2 payment experiences. So it's possible that you may have only 3 accounts as starter accounts, and you have 5 payment experiences with those vendors, and that's enough to get your paydex score established. But when you talk to those companies, you want to make sure when you apply that you ask them directly, hey, who do you report to and when do you report? Because sometimes they also change. People go on the internet and they search on YouTube for business credit and things like that. And that information could be 2 years old or 1 year old and still not be applicable, especially in the COVID environment that we have. So you definitely want to double check and with them. And with business credit accounts, generally they're going to call you. If you go set up an office a supply account with Quill is going to call you. Quill, by the way, is owned by Staples. But the difference between Staples and Quill is Staples will fund you if you're a startup. Quill will fund you if you're a startup. Staples will not. Staples wants to see, I believe it's a minimum of 5 or 7 accounts before they will give you their Staples card, which is ironic because one of your base cards you can use to qualify for that Staples cards is Quill, which is the same company. Don't apply for store credit with no payment experience, no score, no profile, because you will get denied. So don't walk into like a Walmart or a Sam's Club or Best Buy or Staples. All of those have corporate business credit, but none of them will approve you if you have no score, no payment experience, no profile. Those are going to be accounts you use after you use basic companies like these to get yourself established. Now, example, here's what I'm talking about where you know what the criteria is before you apply. Here's Radio Shack. They report to D&B and Experian. They're going to pull your credit to see what you paid on how you paid on time. If there isn't enough data on that report, they're going to ask for bank and trade references. You must be in business at least 2 years. The D&B number, the Dun & Bradstreet number, will be required, and they're going to ask for credit references. And the payment terms is net 30. Now if you know all of this in advance, then and you look at your situation, then you know if it's appropriate to go in there and apply or not. Lachlan Associates will approve any business that's listed in the business 401 directory and has a business bank account and EIN. One of the easiest ones to get set up. Now let's talk about revolving accounts, right? After you have 5 established trade lines, you'll start to be able to get approved for revolving business credit accounts. And revolving credit is just the same as you think about your typical credit card. It's not about, because with a net 30, it's the 30 days start from the day you ordered it. So if I ordered it on the 5th, then the payment is owed the next month by the 5th. If 2 weeks later, I place an order on the 19th, then the money for that order is due on the 19th of the next month. So with a revolving account, you're going to have the same due date every month, and the balance is going to be calculated based on the due date. And it'll be this, and when they report, it's going to be the same every month. And so those are the ones we're most commonly familiar with, because that's how most of our credit cards personally work. There are some, I'm trying to think, on American Express has a what's the name of it? I'm drawing a blank right now. American Express has a couple business credit cards that actually work on a net 30, net 60 basis. So even companies that have revolving accounts will also have net 30, net 60 accounts, by the way. Most merchants and major retailers do offer business credit. They just don't advertise it. You know, when you go in and you apply for a credit card at Best Buy, they don't tell you they have a corporate account. You know, and if you think about it, there's no benefit to the merchant to let the general public know here's an account where there's no personal liability. I mean, and we all know people that are like, man, I can get an account with no personal liability at all. Oh, yeah, I'm going to go get that account and just charge up as much as I possibly can and walk away, you know, because it's happened. So, unfortunately, more than once. But that's why when it comes to business credit, it's not something that they just put the applications out on a table when you walk in to apply. It's the the commercial ones where it's 100% get personally guaranteed that show up. That's why they don't promote those cards. So let's talk about how you get approved. Starter revolving account. So these are the accounts that have the lowest requirements. To get started is going to be Lowe's, Radio Shack, Home Depot, Staples, Office Depot. Those are going to be the easiest ones to start out with. And here's Staples. They're going to report to D&B and Experian. They're going to verify the 401 directory while you're on the phone. Quill will do that too, by the way. Quill will put you on hold and check your directory listings and then come back and say, oh, great, you've been approved, or, call us back in 60 days and try to apply again later. They're going to want to see an EIN. They're going to check that your profile is open and established. If you're trying to establish a business profile with the Staples information, it ain't going to work, because as soon as Staples pulls it and there's nothing there, they're going to deny you. And that's not how you want to start out your business credit profile. And they're going to check to see that your business name and address matches your 411 listing. Here's Dell. Now, you notice Dell only reports to D&B. Now, here's a good thing about Dell. Dell regularly approves people with $10,000 if the payday score is 75 or above. Dell generally will be your first business credit account that has a high limit. But you shouldn't apply to Dell unless you've been in business at least 6 months. And sometimes Dell will check your personal credit. Right? Now, there's always exceptions to every rule, but we talked about not having your social security number on applications at the beginning. With some business credit accounts, they're going to want to look at your personal credit. Doesn't mean that the guarantee is going to be there, but they're going to want to see it, because they may be of the opinion that if your personal credit is poor, they're not going to lend you business credit either. And so just something to be aware of. Now, with those starter accounts I mentioned earlier, none of your personal credit is going to come into play. So if your personal credit is a little icky, let's say, you have time then to use the business credit while you're building business credit to get your personal credit in order. So just something to think about. I see someone asked in the chat, what's the minimum amount I can ask for? Well, it's sort of what you can negotiate. The one good thing about business credit is you can negotiate everything. So I've gotten on the phone with a credit vendor, and they say, oh, great, Mr. Turner, we like Castle. We like what you guys do. We're going to approve you for X amount of dollars. And I say, well, that's cool, but can you do better? Well, how much would you like it to be, Mr. Turner? I don't know. How much can you do? And you don't want to give them a number, because you might be surprised. You might say, well, you're giving me $1,200. I think I need $5,000. And they could have came back with 10. And I've had that happen multiple times, where you're thinking I'm going to get a 30% increase, and they came back with a number that was double what they initially asked for. So the one thing about business credit, a lot of things when it comes to limits and how much you can get is totally negotiable. So let's talk about stores that offer business credit. Amazon, Best Buy, Nordstrom, Sam's Club. Sam's Club has a business MasterCard that you can get with Sam's Club. Now, the one thing about the Sam's Club MasterCard, and by the way, it's a MasterCard. So not only can you use it in Sam's Club, you can use it for anything with anyone that takes MasterCard. And obviously with Amazon, and Amazon also has a store card and I think it's a Visa with Amazon that you can use anywhere. But just about anything you could think of, you can buy from Amazon. They're obviously a really good business credit card to have. The thing I was going to say about Sam's Club is when you apply for a Sam's Club card, most of the time the clerks don't even know that they've got a business credit Sam's Club card. So just be prepared if you walk into Sam's Club and you want to apply for a business credit, they're going to give you automatically the consumer one. And you'll say, no, I want the corporate business card. And they might be, oh, we don't have that. Because you think sometimes that person's only been there 2 weeks and the manager was there 3 weeks before that. So you have to stand your ground. No, I want the corporate one. Trust me, you guys got it. And that's the one I'm looking for. And they'll dig deeper into the file drawer and be like, oh, I didn't even know this was here. I've never seen these the whole time I worked there. That's very common because they don't advertise their business credit card at all. These are all the various companies and stores that offer personal credit and business credit. So just about anyone that you can get personal credit with, you can get business credit with. Now, I also want to point out a couple of things. The big holy grail, of course, is cash credit. And once you got 10 payment experiences, then you can start getting approved for cash credit sources. Now, cash credit is simply, where you can convert that credit limit that they're giving you, that credit line, to cash. It's recommended that you have at least one account with a $10,000 high limit before you start applying for cash credit. If all your accounts are like $500, $1,200, that kind of thing, you're likely to get denied for cash credit cards. So even though they're business, they want to see higher limits than that. And a lot of cash business credit cards will look at your personal credit. Most of them will, matter of fact. So just something to be prepared for. One thing I want to talk about is an unsecured line of credit. Now, there's a couple shortcuts. Okay, so let's talk about that for a second. There's a couple shortcuts. First shortcut is you can have a unsecured business line of credit. Castle will set you up with one if you desire. Initially, you're approved for up to $10,000, and that is based on your personal credit. Now, it's a soft pull, not a hard pull. So you won't have to worry about there being an inquiry. Okay. And then with subsequent approvals, it can go up to 100,000. Now, how does that work? After you get that initial approval, you say, hey, I think I'd like to have more money. You submit business bank statements. We see you got cash flow. And then based on the cash flow, we can approve you again, up to 100,000. And this is all unsecured. There's no personal guarantee. There's no hard credit inquiry. And with some companies, you can use a soft pull to qualify, but once they issue the card account, it becomes a hard inquiry. With us, it never becomes a hard inquiry. It never shows up. If there's credit limit increases later, it's still not a hard inquiry that shows up later. There's no personal credit reporting because this account is reported to Dun & Bradstreet and Experian Business. There's no bank statements or tax returns required. If you want to go up above 10, you would generally submit bank statements at that point, but you don't have to. You can stay right here at the 10,000 level without having any of those other things. And with the way the line works, you could transfer funds directly to your bank account. So if you got a $10,000 line and you need $5,000 to cover a marketing program, or let's say you need to make payroll or something like that, and your receivables haven't come in yet, you can transfer that $5,000 right from your line directly to your bank account. You can also access the line through an associated business MasterCard that comes with the account. And then here's what the costs are. It costs $9.97 a month as a maintenance fee. There's a one-time enrollment fee of just under $100. And that enrollment fee can be refunded if you choose to decline taking the card after you get approved, or if for some reason you're declined outright and we don't approve you, you can get that enrollment fee back. The interest rate is going to be prime plus 9 to 19. Right now, prime is at 3.25%. So that means your rate can be anywhere from 12.25% to 22.25%, depending on your credit, which is fantastic when you talk about a credit account that is completely unsecured, no personal guarantee, and it's not showing up on your personal credit at all. Now, let me tell you the other shortcut. The other shortcut is we have a business credit card program where we can help a business owner get business credit cards based on their personal credit. The cards are business credit cards. So the reporting is to Dun & Bradstreet and Business Experian. The difference between that program and this is that there will be an initial hard inquiry on your credit when you apply for those business credit cards. So that's one of the key differences. But when you're approved, whether it be for $50,000, $75,000, or even $100,000, it will not show up on your personal credit. So you don't have to worry about paying, $30,000, $40,000 in business expenses and messing up your personal debt to income ratios if you're trying to buy a house or a car or any of that kind of stuff. So I know I've given you guys a lot of information in this talk. Here's again my contact information again. I'm going to stop sharing my screen. There we are. And so if you guys have questions, feel free to drop it in the chat. And I'm going to, I'm checking right now to see if there's any questions we did not answer yet. I'm just running through here. Someone asked, I have an SBA loan. Is it going to contribute to building my business credit? Generally, no, it does not. It depends on the lender. Some lenders report, most don't. So when you apply for that SBA loan, you want to ask that specific bank who to report to, or if you even report at all. Because with most SBA lenders, they do not report. So now, I'm not poo-pooing SBA, because the one nice thing about SBA will do loans that no one else would do. Because the one thing about an SBA loan, SBA does not have a technical limit or floor when it comes to your personal credit. So generally, if I go into Chase or Comerica or Bank of America and I want a business loan, they're going to say, okay, the minimum credit score is going to be 720 or 700 or something like that. If I'm applying for an SBA loan, however, SBA does not require a 700 or even a 600. All the regulations say with SBA is that I have to have good credit. And who defines what's good credit? It's the lender. Now, with some lenders, generally this is not going to be your big commercial banks, but there are SBA lenders that are not your brick and mortar commercial banks that will approve you, and they'll say, oh, they have this account that they're behind on, but they got a payment plan. And so they'll say, are you current on the payment plan? And you'll say, yeah. And then you show documentation that you're current on the payment plan. And they'll say, oh, okay, well, they got good credit then because they're current on all their payment plans. Now the one thing about SBA, you cannot be delinquent with government money. So if you took in guaranteed student loans, or if you had a previous SBA loan, or if you had taxes, or any type of situation where you may owe the government money and you're behind with them, you can't do SBA loan. They're not going to approve it if you're still in arrears with them on something else. Any other questions you guys might have? I'm just checking here. I see someone's asked, what's the turnaround on the business line of credit without a PG? Generally, that turnaround is going to be 24, well, I'm going to say 48 hours, 48 to 72 hours. It's a one application process. It's one basic application. The only documentation you need is your EIN, voided check, a copy of your articles of organization, if it's LLC, or articles of incorporation, if you're a corporation, and a copy of your license. And so you notice none of those are income documentation. They're really identity, because we're talking about a credit account without a personal guarantee. So it becomes very key that we vet that that's a real business. That's one of the reasons we ask for a business checking account. And we talked about this earlier. A lot of lenders are like, you're not even in business if you don't have a business checking account. And so if those things are in place, generally we can approve someone even down to a FICO as low as 500. Now let me be clear. If someone has a 500 or a 550 FICO score, they're not going to get approved for a $10,000 business line of credit. At that level, it might be $300 or something like that, but they will be approved. Okay. And so they will have the opportunity to start their business credit journey at that point. Someone says, what's the turnaround time? I answered that question already. Oh, thank you, D, for the compliment. D loved our content. We have a free business credit ebook. So if you guys are interested, feel free to send me an email, and I'll send you a free business credit ebook that'll have all the building blocks of how to start to build business credit. And I want to say something about COVID right now. COVID is affecting a lot of industries and a lot of businesses right now, but business credit is still available. It's still happening. And so if you're interested in seriously building up your business, it's better to have access to capital than not. It's better to have access to the money and not need it than need it and not have it. So something that you might want to think about, because you never know when an opportunity can come up. Now, we're not talking about being in trouble, but I've had businesses where they were awarded a contract for a big company, and the company said, well, we're okay with giving you these guys this contract, but we want to make sure you got a $50,000 or $100,000 line of credit with your business to back it up. And then the person's coming to me and say, hey, Malcolm, give me approved. I need it like in 2 days. Okay. That's tough to do. You don't want to put that kind of pressure on yourself, because generally it doesn't work out well. We would want to sit down with someone and make sure all those credibility steps that we talked about are done and that the business is set up correctly. That way we have maximum opportunity for success when we're applying for business credit, because we want to set you up to succeed, not to fail. Let me see if there's any other questions in the chat. It looks like that was it. So I want to thank you guys for participating. Thanks for coming on board with us, and I look forward to seeing you guys later on. Take care, and look for our next meetup. Bye-bye.